Well, hello everyone, and welcome to King's Crowd's Fireside Chat, focused on investing beyond the mainstream. I am so happy to have on today one of my favorite people in the industry, Stefan von Imhoff from Alts.co. Stefan will tell you more about Alts.co, but they are one of the best publications doing deep dive research on all things alt investing, from classic cars to movie financing to tequila and much, much more. They also have one of the coolest investing clubs in our space, and I always enjoy partnering and working with these guys. There are few people I think more knowledgeable or passionate about alt investing than myself, but I put Stefan right up there and always enjoy our conversations. We will also be joined by David Spickett, founder and CEO of the Car Crowd. He's mixed his passion with investing and created a way for you to be able to invest into classic cars with an investor return in mind. I'm telling you, the alts team finds some of the most interesting alt assets you can invest in out there, beyond your traditional private equity and debt deals. And I am excited to dive in with Stefan and David to learn more about what they have brewing for you as an investor. So let's get into it and welcome Stefan and David. Hey guys, how are you? Stefan, David, nice to see you.
Good to be here.
How you doing? Great
Yeah,
to be here.
so let's kick it off with just a couple intros about yourselves and then feel free to take it over, Stefan.
All right. Hey, good morning, everybody. It is 4:45, 5 a.m. in the morning here in Australia. So forgive me if I mess up a few sentences, but it's great to be here. My name is Stefan. I am the CEO of Alts.co. We are an alternative investment firm. We started as a newsletter, and we grew that into a community, and now we have a big fund, which we'll get into in a minute.
Yeah, and David Spickett. Unlike Stefan, it's the other way around for me. It's 8 p.m. in the evening. So, and being alone here as a single parent, if you hear any kids, I do apologize. But yeah, great to be here. Thanks for the opportunity to come and help explain a little bit more about the Car Crowd. I'm the CEO here and founder. We've been going for roughly 5 years now, and we're really on a mission to unlock collectible cars as a really strong asset class for more investors across the globe than ever before. And we'll give you a bit more of a flavor about how we do that later on.
Outstanding. Well, yeah,
Cool.
let's learn more about alts.co. Let's get into it.
All right. I'm going to go ahead and share. Fantastic. All right. So nice to see everybody. So yeah, like I said, we are a research first platform that we basically help people invest beyond stocks and bonds. And I mean way beyond. Like, we're not talking about, just kind of like artwork and stuff like that, which is sure, that's great. But we get into all sorts of cool esoteric alternative investments, just way beyond the beaten path. And I've got some great examples for you later. We reach about 135,000 people each week. And we've got a community within that of high net worth accredited investors, about 1,300 strong. We're actually investing in these deals too, into these alternative deals. And we've deployed about $12 million so far over the past few years. We also do these meetups and stuff. You can see that picture on the right from our trip back in 2024 down to Mexico, where we went down with some folks from the community and came back with $500,000 worth of tequila barrels. So that was fun. I probably don't need to explain to you guys why alternatives are so hot right now, but it's all about diversification. The stock market, Chris and I talk about this all the time. The stock market, equity markets are just increasingly concentrated. There's a lot of concentration risk right now in equity markets. I mean, the Magnificent Seven is basically powering almost the entire S&P 500. And we're not anti-mainstream investing by any stretch. A huge part of my personal portfolio is in equities, and everyone on our team, same thing. But there is an ocean of opportunity out there beyond stocks, beyond bonds, beyond even startups, right? And that's what we're trying to bring to the world. Some of our biggest deals have been in tequila, like I said, fine art. We do a lot of lending, private credit, music royalties. We just had a cool K-pop deal. Film is becoming a big part of what we do. And I would say within our community, the alts probably represent like maybe 20, 25, 30% for some folks in our community in terms of their overall portfolio. So yeah, I mean, this is a community for folks that are just that love to think outside the box. And the biggest thing with us is that we don't just research, we're actually investing, right? So the way we do this is through special purpose vehicles, SPVs. So actually, you can see that's us on the right. That's me and my co-founder Wyatt, and that's with us and our tequila dealer down in Mexico. So what we did is we basically, treated this trip as a kind of like a due diligence exercise. And when we returned, we said, okay, look, we're going to create a vehicle so that everyone can invest into this tequila deal that we put together. And that's basically the way we like to do it, because it's like, look, if you want to invest in, let's say, tequila today, not a bottle, but like, 50 barrels, like, where do you go? What do you do? Like, there's no tequilabarrels.com, right? Like, these markets don't exist. We help bring them to life through our SPVs. So that's a big part of what we do. And one of the SPVs we put together is with David at the Car Crowd, which we'll get into in just a moment. Altea is our private club, like I said, for high net worth accredited investors. So this is not cheap, it's not free. But what it does is it allows you to invest in our deals at different tiers. This could be 1 in 20, this could be 0 in 10. It depends on the tier. But this is kind of your ticket to this world of exclusive alternatives. Besides the investments, we've got a fantastic community, in-person events galore. Just this month, are we in October now? We are, yes. So just this month, we've got events we're hosting in Singapore, Hong Kong, Los Angeles, Miami, New York. I hope I'm not missing one. We've got a lot. And this is what it's all about, especially, these days. I think, post-COVID, the IRL kind of experience is just a really important, big part of what we do. But one of the most important parts of what we do is the due diligence. And this is, something that I think a lot of people don't understand when they first kind of like see us. They say, oh, you're kind of like a syndicate for alternative investments. And yeah, that's true. But with that, due diligence is the most important thing with any deal, but especially in the world of alternatives, where there's just a lot of crap out there, right? Again, Chris and you and I were talking about this a couple of weeks ago on the crypto side of things. Like, there's just so much crap out there. And it's really tough for, our team to diligence everything ourselves. So what we do is we activate the community. We tap into the experts within the community for each deal. So film experts vet film deals, farmland experts vet farmland deals. We had a K-pop deal recently. I don't know the first thing about K-pop, but I found 6 people within the community who are music rights experts who were able to help us vet this deal. And it takes months in some cases, but that's the rigorous process we go through before we bring anything to the community. It's a really important part of what we do. And we call it decentralized due diligence. So it's basically the idea that, like, we're activating and leveraging the power of the full community to make sure these deals are good before we all invest together. Like I said, we've got a lot of meetups, and just like the deals that we bring to the community, they're very unique, right? So this isn't kind of like, oh, let's all go to a bar somewhere and kind of do the same thing that every other meetup is doing. We really try to tap into the power of the community to get us access to stuff that we couldn't kind of get anywhere else. So, for example, we were able to hang out in a mansion on Seacliff Ave in San Francisco a couple of months ago, this past summer, through a connection from the community. We were able to rent an airport hangar, like an actual airport hangar, small airport. This isn't like LAX or something like that. But, we were able to hang out in a hangar with airplanes and everything like that through a connection. And so it's really that kind of like behind the scenes curated approach that we're looking to take. We call it adventure capitalism, which is probably a term I stole at some point, but I don't know. I like it. Who's in the room? So who joins Altea is kind of a mix of kind of alpha seeking, outside the box thinking retail investors, right? Mostly accredited. Almost all of our deals are only for accredited investors. I wish that wasn't the case. I can't wait for accreditation to go away someday. These rules are very onerous, and I'm not a fan. However, they are what they are. We've got a lot of angel investors. We've got a lot of fund managers. We've got a lot of folks that are, maybe they represent funds, but they are investing on their own, right? Because again, our deals are really outside the mainstream. And so it's not typical for a lot of institutional capital with the kind of deals that we bring. It doesn't fit their mandate. But on a personal level, people love them. Founders, operators, family offices, LPs. We've got some professional football players. You can see that guy on the right there. It's Patrick Taylor. He plays for the 49ers, and that's the hangar that we hung out in Austin, which is that was a really, really cool evening. Who else joins us is, I don't know if you can see that gentleman on the right, but that is Chris. Chris joined us in Atlanta earlier this year, and I didn't have the luxury of being there, unfortunately, but I know he had a great time, and that was a good evening eating tacos and stuff down in our Atlanta meetup. Thumbs up, Chris. Was it a good time?
Great
Awesome, man.
time. Fantastic.
So some example deals. Here's what alts, and I'll tell you what we've invested in recently. Film is becoming a huge asset class for us. Specifically, not film equity, but film bridge financing. That's not the purpose of today's presentation, but just know that film is becoming an enormous part of what we do. Artwork, we've had a lot of success. I am not legally allowed to talk numbers. I can only look you in the eye and say it has been very good. This is not NAV. This is cash in the bank. The returns have been awesome. K-pop one, that was our recent K-pop music rights deal. This was really fun. This was fun to do due diligence and research. I never thought I'd get so into K-pop in my life. I kind of became a fan through all this. I don't know who's seen K-pop Demon Hunters, but that was part of our due diligence, guys. That was part of the homework we did on this one. So we were able to invest in a K-pop group. And yeah, this was a well-timed deal, one I'm very happy with and very proud of. I talked about the Tequila. We just closed up a litigation finance deal with a UK firm, which invests in basically secured notes backed by very low risk legal cases. So all sorts of cool stuff. But one of the most exciting that we've ever done is what we call Auto One, which is a classic car arbitrage scheme that we have worked on with the car crowd. So David from the car crowd and my co-founder Wyatt have basically, we joined forces a few months ago to kind of create a unique arbitrage opportunity where we buy cars, classic vehicles in the UK and sell them in the US market at a premium. These cars are often extremely tough to find in the US. They are completely, the tariffs do not apply thanks to a loophole in the law about vehicles that are over 25 years old. So there's no import taxes. We've basically created a repeatable model with really strong returns. We just spun that up with David at the Car Crowd. So I think that's a good point to spin it over to David to explain how the Car Crowd works and how we work together.
Thank you, Stefan. Shall I just switch over to share my screen? I don't have any slides, but if I can I get the permission to share here? There we go. So let me just oh gosh, I've just got a little video that I'm going to share in the background. I mean, hopefully, people will still be able to concentrate because the things that are going on behind me are probably quite pretty. But yes, so as Stefan said, so I'm CEO at the Car Crowd, and we really exist, in a similar vein and culture to what Stefan said, to really try and unlock what we think is one of the best asset classes out there, one of the most underutilized asset classes as well in modern times. And there's been billionaires and sultans that have amassed huge car collections over the years, and they do that for a number of reasons. Mainly because it has advantageous tax positioning. It's quite low risk but strong return, with 12 to 15% annual returns that can be seen quite historically over the last few decades from buying the right collectible cars. They're also globally liquid, which really helps. The liquidity aspect of you can move a car into a different market to sell it if that market is more buoyant, unlike something like property where you're kind of more fixed. And also you've got quite a strong opportunity to keep a low correlation to other markets. It's quite a diversification tool when you've got a warehouse full of collectible cars. But in that point there, I guess, is kind of part of the issue. The barriers to entry have always remained and been quite high. Unfortunately, you need the knowledge to be able to buy the right cars. You need to have the infrastructure to store them. You can see behind me, also on the screen there, you've got some quite interesting big units that are there. Not everybody has that space and that time to be able to find them, or the network to really make sure they can buy the right cars and they don't get duped by a random dealer that's just trying to sell them something that's maybe got a bit of a lipstick on a pig type analogy. And then the final part is the capital. You need a lot of capital to be able to deploy into these assets. in order to build up a massive big collection. And that's really where Car Crowd kind of comes in, and where we thought of the ethos of trying to remove those barriers and lower those water levels to enable more people than ever to join together to own collectible cars. We started in 2020. We have a fractional, effectively a fractional approach here in the UK. So we have our own proprietary platform that allows multiple investors to join together to own a single asset, and that's held in a UK Bear Trust. So far, we've completed about 44 of those investments, ranging from 1960s E-types up to the modern GT3 RS you can see on the screen there. And it's all driven by our proprietary data algorithm. We have a thesis that's very clear on kind of what drives a car to appreciate rather than depreciate. Things like being in motorsport, having a really good maybe movie pedigree, being owned by famous people, but also things like having a big manual gearbox, big engine, sorry, and a manual gearbox. That nostalgic driving feel is also very kind of important as well in terms of that investment thesis. So we bring those to the platform and allow multiple parties to join together. And then more recently, we've had demand from some global investment platforms that are looking to access collectible cars for their audiences, Alts being a fantastic example of that. And that enables us to kind of offer a white labeled service, really. So doing the same due diligence in terms of the curation, the same approach in terms of the sourcing of the assets, the storage, the insurance, the maintenance, all on behalf of kind of another party, and to get more and more investors able to then unlock the great asset class of collectible cars. And we've achieved some pretty good results. The average exit so far has been around 35% gross annualized return, with the average across the whole of the collection being 12.6% year on year. And we're hoping to outstrip that quite significantly with the Auto One opportunity that Stefan just introduced before I started. So we can go into a little bit more detail, maybe, Stefan, about kind of what Auto One is and how that's going to play out in terms of the approach that we're using, which is slightly different to our normal fractional model.
Yeah, that's a great kind of conversation to get into, because it's important to note that Auto One is not the way that you guys usually do business. It's not structured in a fractional model. It's more of an ongoing kind of cash flow structure. And the way we're able to kind of come together and create that is pretty cool, pretty fascinating. This is a first for both companies. David, you'd probably be best to speak through the structure here, but it's a very interesting one.
Yeah, and at the top of the show, Chris, I think you mentioned that Alts have got some amazing sort of data approach and analytical approach to the alternative investment space, and I think that's what really drew us together as two companies. We're very, very data driven. We have sort of 860, I think, thousand data points on collectible cars and the sales prices from 2010 onwards. And when we engaged with Alts and we met Wyatt and I got on really well, both kind of fairly data analytical geeks, I guess, that really wanted to dive into the numbers. And we started finding between the US and the UK markets some kind of, actually not just UK, actually the European market as well, some certain assets, certain types of cars that were really undervalued in the UK or EU versus where the value was in the US. And when we delved a bit deeper, there's lots of changes that happened during the late 80s into the 90s and early noughties, where emissions regulations were a lot tighter. We had a lot of stringent things around safety as well that came in, and what it meant is that a lot of cars, or some manufacturers, just decided not to release the car for the US market because they just couldn't afford to do all of the changes and keep up with all the regulations. So some of those cars never were released, and they're not just the run-of-the-mill cars. We're talking GT3 RS Porsches, we're talking Lotus Elise, some really nice sports cars that have done fantastic European and global success, but never actually made it to the US. Other cars like the Ferrari 328 or 308s, they had detuned engines and rubber bumpers put on them. So did some of the Porsches as well. Anything with a roll cage couldn't be released. So the RS Carrera 993. So there's sort of a number of cars, roughly about 55 we've actually identified, that have a high demand in the US market, but a very low supply or no supply. And obviously that's a great recipe when you're looking at trying to build an investment model. Anything where you've got high demand and low supply is definitely the place you kind of want to be. So with Alts, what we've kind of developed, I guess, is then this sort of cyclical, as Stefan said, cyclical approach. Around every 6 months, we look to source and deploy around $600,000 of capital at the moment into collectible cars that we're sourcing from the EU, UAE, even the Middle East, and then have those shipped over to the US, ideally on an already sold basis. So it's kind of a buy to order type model that we're trying to introduce. And we think that the analysis that we've done, the level of price differential can be up to 30%. So rotating through that twice a year can give some fantastic opportunity to get some really serious returns, but also still have a fairly low risk model, because it's always asset backed as well by the asset that we're procuring. So yeah, we really feel this is something that if it works on sort of a slightly smaller scale, I guess, with Auto 1, Auto 2, 3, 4 that can follow it, can genuinely open up a massive opportunity to create a full supply chain between those overserved markets into the underserved US market.
So if you don't mind, I have a whole bunch of questions and I'm just really curious to ask you about this. So first off, when you hear something like this, like 30 to 35% returns, it's obviously really high, which is always like, oh, this is almost too good to be true. I understand the concept that, hey, folks in the US, it's hard for them to get access to these. So getting it from you is kind of the only access point, and thus you can charge a nice premium to where prices where you are. Like, why isn't this just like a broker, or like, can they find it elsewhere? Is there other places they can go beyond you to find these cars? Why are they coming to you? What is the benefit of buying from the car crowd? Love to understand that. And it just goes to like, what is the intention of these people, and understanding how it is that you can get such a nice premium from where, you buy it to who's actually purchasing it in the US.
Yeah, it's a great question. So I think that the biggest thing is actually agnostic. Is the biggest word I'd use there. So we aren't a dealer. We don't have stock of cars. So therefore, we have an opportunity to go out and source the right car and the best car, and find the right one at the right time. We aren't wedded to having to shift through stock every 2 or 3 months in order to create, a return back on our stocking loan, for example. And what that means is, if you do as a US customer, you're a long way away from trying to source a car in Italy, for example, or somewhere in the EU. And what that can mean is you have to trust the dealer. You have to trust the person you're buying from. And sometimes it's difficult to really understand their agenda. And so the way that we structure it with investors, but also with alts, is that actually we kind of have a structure of fees that mean when we source a winning car, we both win, rather than us trying to just claim the margin up front like you would when you buy from a dealer. If you buy from a dealer, you pay $200,000, for example, the car gets shipped to you and it's not in great condition. You're in a litigation, conflict, them trying to get some money back off of it because that dealer's made $20,000. They're happy with their commission, they're gone. With us, it's about, there is a small fee up front in the sort of procurement and the sourcing of the car, but the majority of the benefit is then put basically our money where our mouth is, that we can find these really good assets and that we share therefore in the upside with the investors.
And what is your sourcing strategy to actually find these cars? From all these different and unique buyers out there, potentially on different continents and even Europe. How are you finding and sourcing these deals? And just one other thing, if you're done with the video, if you don't mind shutting it off, just
Sorry,
so
yes.
folks can view us easier.
There we go. Yeah. Yeah. So how are we sourcing the cars? So I've been in and around cars since I was 4 years old. My dad had a collection of cars that I helped him manage through my teenage years, and then latterly I've also helped neighbours, some sports stars, all private, kind of individuals, source cars and manage kind of collections, as well as been involved in a number of car clubs, from the Ferrari, Aston Martin, Porsche owners clubs as well. And that meant I've built up quite a big network. And I think being a passionate petrol head first and then offering as an investment has helped, rather than being an investment person first and then trying to get into cars. So the network that I've built up, I guess, and the expertise stretches mainly in the UK, but also then into some great people that I know that are in Europe, in Holland, also in Switzerland and Germany as well. And I think, over the years, we've done lots of deals, we've attended lots of events, and we've built up a really trusted kind of network of individuals that have access to both on-market and off-market cars. Importantly, there's a lot of collections that are around that where collectors don't want to put their cars on the open market. They don't want them to be in auction houses where they might not sell. And if they don't meet reserve, it's plastered all over the internet that they haven't made it. They sort of are cautious around the approach to selling. And that is actually great for Car Crowd, because we have this very private, very kind of closed system that we use that enables us to place cars globally, but without having to do the big splash and the big, plastering all over the internet to try and sell it. And I think that anonymity really works quite well for some of those collectors, and is getting more and more popular, which means we're getting more and more off-market cars offered, and therefore have better access.
Got it.
That's
And
that's
for those who are listening, definitely feel free to drop your questions into the Q&A and we'll be sure to get to as many of them as we can. Stefan, did you have something you want to say?
Yeah, actually, that was one of the questions that came from the Q&A here about us, and it's the exact same thing. So it's like, in terms of how do we source our deals, like, man, I cannot explain. Like, of all the aspects of our business, sourcing deals is not a problem. We have more deals than we know what to do with. The question is, how do we diligence them all? How do we decide what to diligence, right? Like, that's where the choke point is. We've become kind of like known as like the place to go for all sorts of like, eccentric, quirky, offbeat stuff by virtue of the fact that our community is so large. We have just all sorts of people reach out to us every week, like, hey, my brother-in-law's got this, and it's like, cool, like I'm always interested. But the due diligence, I cannot stress, like, that is like such a huge part of what we do. And so this is why it's so great to partner over the long term with David and the car crowd, is because we've been working together now for years. We trust each other. We've met each other in person. Well, I actually have never met David, but I know my co-founder Wyatt went up and had a great tour of the facility a few months ago. But the point is, we've been working together for so long that we are able to not just know that the car crowd is a great source, but actually put our heads together in the alternative space and say, hey, what can we do? What can we bring to the market that's never been done before? Well, instead of maybe doing a buy and hold for 3 years, why don't we just have an ongoing classic car fund, which is essentially what we spun up together here. So that's yeah, like, just to echo what David said, the sourcing isn't a problem kind of when you get to this level. It's just the diligencing. And like they say, you don't make money when you sell, you make money when you buy, right? And that definitely applies to all sorts of stuff. Real estate is one, artwork is one, classic cars is absolutely one.
So actually that's a great question. In terms of when you build this fund, basically, is that almost like a blind pool? And then you say, okay, we're going to go find cars that fit our model. We'll buy those cars with the capital we've raised in this fund, and then we'll look to turn them within 6 months. Is that kind of the model there?
Yeah. We basically have a mandate, and so we raise on that mandate, just like a startup syndicate would, right? Like, we want to
Yep.
only invest in California-based AI companies. Oh, cool. There's a billion of those, right? Like, so the mandate we set up is much tighter than that, though. Actually, David, you can maybe speak through the mandate.
So exactly, yeah, we've got the sort of set of criteria that Wyatt and I came up with, as we sort of alluded to earlier on, in terms of the opportunity to buy certain cars that fit the criteria that we know have got the arbitrage play. We have quite a rigorous like due diligence process, as Stefan said, in terms of how we go about presenting the opportunity to buy an asset into the fund. Us as kind of the asset manager or custodian for the period have a duty of care really to find the best assets, and that goes back to what we said earlier in terms of the fact that we've leveraged our fee structure into the success of each one of the placements. So we know we've got to find the best deals, but with that we make sure we have full digitized history. We make sure that we have obviously loads of videos and pictures of the car. We do independent inspections, paint depth sampling. We've actually developed our own proprietary tool around deep research to go through almost every single social media post that the VIN number, chassis number, or make and model might have been included in. So we can create these fantastic kind of dossier of provenance and history that goes alongside the car. So if the car fits the mandate, it's then finding the right one of those cars to make sure that we've got kind of the best example. And I think that's what again sort of sets us apart a little bit, that you probably wouldn't get that from a dealer. You wouldn't get that from a broker. Certainly they're just there to try and make their 3% on turning a car over. So we try to approach it as an asset manager. That's kind of our unique USP, I guess, in terms of why we fit this space, because we are car people, but we are running it as a very well structured, high governance investment business.
Yeah.
I'll jump in real quick just to
Sure.
echo what David said. I think what we try to do is kind of marry the world of due diligence with the real life meetup experience, right? So what I mean by that is, like I mentioned, like for the Tequila investment, we took 10 folks from the community down to Jalisco, to Mexico, for a week. There was a lot of tequila sampling in this week, okay? But like, we weren't there just to have fun. We were there to do due diligence. We met the mayor. We went not backstage at all the distilleries, but we saw how the distilleries work. We met all the distillery owners. That's how due diligence needs to be done. It needs to be done. It can't be done through Zoom. It's got to be done through handshakes. For our K-pop deal, I didn't go to Korea, but I went to Nashville, and we took 10 folks from the community to Nashville, where we met all sorts of industry insiders, PROs, producers, CEOs in the industry, to really just understand like how this stuff works, and basically to build our network of diligencers, right? And with the car crowd, it's the exact same thing. I mean, it's getting to the point now where, like, David and I are talking about like doing, a yearly event in the UK. In the meantime, we've got a classic car event happening in Los Angeles next month. David's going to hopefully come down for that.
Yeah.
But these IRL experiences for us are due diligence exercises as well. It's just an important kind of distinction.
No, absolutely. And I totally agree. I mean, having gone to a couple, and again, it goes to why I really like you guys, trust you guys, and feel like you're a really good partner in the alt investing journeys. I went to Atlanta and New York with you all, and we went to a really high end jeweler, and we were looking at these like really high end, 50, 100, $200,000 diamonds, and they had all the diamonds out for us, and they're talking about the value of high end diamonds and the appreciation of them and what you need to know and understanding, all of that kind of stuff. And we talked with a movie financer who finances short-term loans in large movie productions and how that actually works and mechanics. So you really do get kind of that live in-person experience to hear from the experts, learn from them directly. It's very, very cool. So no, I have a lot of respect for the way you run your due diligence. David, question for you on the fee structure. You mentioned you kind of built the fee structure to support the model. Tell me a little bit about what the actual fee structure is. And then tell me a little bit about your team and who all is involved in this process of sourcing and diligencing these car, investing opportunities.
Yeah. So fee structure, not mentioning sort of individual numbers, but we basically have a curation fee, we call it, which effectively mainly covers cost, to be honest, of the sourcing. So the provenance checking. We have people that go to actually physically inspect the assets and build the appraisal reports, etc. So that curation fee is usually around 3% of the overall value of the asset, but that does vary depending on obviously the price of the asset. So we can sort of move that up and down, but yeah, we try to kind of make sure we cover the cost aspects on that. Then there's a kind of holding asset under management charge that we have, which is typical of any kind of custodian or asset manager, that you have to look after these things and protect them. Obviously within the deal with alts as well, we've baked in some at cost numbers around transportation, making sure that the shipping, we have again a global partner in terms of our shipping, so we can get preferential rates on moving cars around from all over the world really. But that also helps that we can pass that kind of discount onto the investors. And then the final one, is basically a profit share. So as the car gets realized, there's going to be an amount of profit that comes back. The vast majority of that will be kept by the investors, and then obviously alts and ourselves kind of split a small amount of margin for that deal. And then the plan is that the original investment plus the profit gets reinvested, and we go again and we keep building up this kind of bigger pool of capital to keep deploying. In terms of the team, we have 4 full-time employees. We have a full-time data analyst. He is literally every single day looking at collectible car prices, difference between US, UK markets, Australian markets, Singapore, Hong Kong. He does lots and lots of data insight, analytical stuff around the price curves, the trajectory of how cars appreciate, when they appreciate, best length of hold periods, etc. So that we always try and stay one step ahead really, and make sure that this isn't just a passion project. It's a very data driven, almost like a hedge fund manager would, in terms of the analytical approach that we use. We have a vehicle operations manager. Looking after 120 assets takes a full-time in person. So yeah, he looks after all of the assets, make sure they're moved, make sure they're exercised, make sure they have good tire pressures, the batteries are trickle charged, etc. It really is quite a full-time job. And then Suresh is our CTO, as my co-founder, and then obviously myself as CEO. So that's kind of the core team, and then we have a number of advisors that support us. The main interesting ones, I guess, is people that have used to work in collectible car or supercar dealerships. We kind of make sure we try to have a network or a curation panel of people that are very experienced in the market. And we say sort of 60 years worth of experience that we've got collectively between us in terms of buying sort of supercars and collectible cars. And again, not just based here in the UK, but people based in Dubai and also people based in Central Europe as well. So the curation panel is probably the biggest sort of resource pool, I would guess, in terms of people we can touch on. But they are also the sort of longest standing relationships and the people that we kind of trust the most.
Something that I thought was really cool too about the Altea group and the folks who come to the events, they're definitely very, you know, cunning, thoughtful investors who are asking the right questions. And it's interesting to kind of get the collective. And one of the things that I thought the group was particularly good at in all the kind of sessions we went to is they're all wanting to understand risk. And it's like all of these sound really good, right? The movie financing is like 17 to 20% returns. You're talking about upwards of, you know, in gross 30+% returns. And the question that a lot of folks were always asking is like, what's the downside here? How can things go wrong? How do I lose my money in this deal? So can you give us a sense of what it looks like when things do go awry, or what can go awry here and what you should be aware of?
Related specifically to classic
To
cars or just
to the
in
car
general?
crowd. Yep. Yep.
David.
Do you want me to go? So, I mean, yeah, of course, there's risk with any investment. Absolutely. I mean, we feel like we've got one of the best asset classes around because you have a real world asset that backs up all of the investment. Full stop. The asset is insured, so there is, you know, if there is any eventuality in the asset, then the asset is fully insured. The asset is also globally liquid. So if we have a massive issue within the US, and it just means either we can't import the cars or the tariffs go up to 60%, whatever might happen, it's not like that's our only exit. You know, there's a left-hand drive markets across the majority of the Far East, as well as also across the rest of Europe and the Middle East. So there is definitely other exit strategies for the assets as well. In terms of, I guess FX plays and things like that as well come into it in terms of the volatility of currencies across markets. But again, because the asset is globally liquid, we can move it around. So, the risk really is just, does the car, one, do we buy the right car? Do we, but again, that's our due diligence. That's our kind of, skill set and expertise. And we always say to any people that do this in their private lives, that's, it's always worth getting an expert to review the car, look at it mechanically, but also check the history and the provenance. That's a real key thing. But so that sort of protects us hopefully from buying, a bad example or one that's not quite correct. And then I guess the other thing is just nobody wants collectible cars anymore because everybody's driving flying cars that and no cars can be driven on the road. But again, I think if anything's happening in that, it's probably the opposite, which is more people are looking for the nostalgic driving experience rather than the autonomous driving experience. And therefore, the cars we're procuring in the 90s and noughties, the cars of kind of a lot of people's childhood, the poster cars, are the ones that if you come into some capital, you want to keep. And even if that means in 10 years' time, you're going to be able to do it on private racetracks and not mainstream roads, I still think there's going to be a huge market for collectible cars. I mean, it's already nearly 60 billion globally. So, that's not going away overnight just because potentially there's going to be a ban on petrol or diesel or whatever it might be. So, we really feel like it's an underutilized asset class. It's because there's some barriers to entry, but actually, if you do look at it less as a a thing that you want to drive and a thing that you are knowledgeable about, understand its demand and desire, and then want to actually deploy some capital into something you're passionate about as an asset class, it can actually be a really, really strong one from both a risk perspective and a returns.
Yeah,
And
I'll
then
just
in terms,
I'll
oh,
just
go
hop in
ahead.
real quick just to add to that. Like, so in terms of our community, what we found is what people look for. There's kind of generally like a sweet spot of two or three things, right? So first of all, is it something unique that they couldn't just get on their own, right? And even within an asset class that they could technically get on their own, is it something that we're bringing to the table to the community that like is just really tough to get even within the asset class? The partnership with the car crowd is a perfect example. This structure has not existed before. I cannot stress this enough. Like what we're doing with the car crowd, that's not like a common thing by any stretch. This arbitrage game like is not common. So that is definitely number one. Number two, I think that a lot of our community members are looking for we're starting to lean more towards the kind of fixed rate of return type of investments versus moonshots. Like it's actually interesting because I personally love startup investing, but we as alts and Altea, we actually generally don't invest in startups. And it's not that we don't like the asset class or we don't like grand slam home runs. It's that we don't like the possibility of striking out. Our community generally doesn't go for things that can go to zero, right? What we try to do is bring that sweet spot of fixed return, lending type products to the community that kind of fall between like the 13 to like 18% annualized return. That area, that tends to be like the real sweet spot. So I'd say if it's unique, it's kind of in that sweet spot, and it's something that is securitized. It cannot fail. It cannot go to zero. Like take the tequila barrels, even if the world, goes to shit, like the barrels and the liquid inside them are going to continue to appreciate. They're still going to have some core value that is well above zero. Like that's, I think, what people look for. And when I think about like cars, man, I just want to say I totally agree with you, David. Like, I've thought about this lately as well. Just as the world, I mean, first of all, most cars look all the same now, right? Like a lot of people have talked about
Yeah.
this. Like every car is just like white, gray, like you can't even tell what the model is. Like, and it's like classic cars have
Totally.
such a unique body and such a unique sound and feel to them, not to mention they're manual, most of them, right? Which is another thing that's gone bye-bye in the world. Like the way it's going with the electrification, I personally love it, but it just makes what we're doing together like so much more valuable, right? So just wanted to add that as well.
Yeah.
Totally. One other question on the cart crowd, and then I'd like to get to a couple on Altea specifically. On the cart crowd, average length of time, like hold periods of these investments. It sounds like it's fairly quick, but can you give us an average length?
Yeah, it is. It is very quick, and it's very dynamic based on the opportunity. So with the Altair investment, it's going to be 6 monthly rotations. We've got other cars that we've just crowdfunded, like the GT3 RS, which will be kind of a 2.5 year hold. And then we've got some things like the E-Type, which is much more of a blue chip investment. 7 to 10% a year return, and that's going to be up to a 5 year hold. So we kind of develop them and bring different opportunities to the car crowd platform for the fraction ownership, but also to wider audiences via our partners, in order to try and suit really what their investor base wants. And therefore, you can have like a diversified strategy with us for some short term, quite high, not quite fun, sorry, and high return stuff, or some sort of longer term, good diversification, kind of uncorrelated stuff that, is just a good place to put your money and get 6 to 10%.
Nice. That's awesome. Couple questions for you, Sven. Is Altea access required in order to get access to your SPV opportunities, or is that like a VIP tier for events, lower fees, etc.?
Yes, you must be an Altea member in order to invest in our SPVs, join our events. Membership starts at $500 per year. That's the lowest tier that we have. But yes, you do need to be a member.
Awesome. And then one other that I wanted to get answered live, just so everyone can hear it. Do you tend to find that Altea members tend to come from certain cities, or do most require and should members expect to have to travel for many meetups?
Great question. So we are disproportionately represented in 3 cities. You can probably guess what they are. One is New York, London's another one, and LA is number 3. That said, we definitely have members all over the world. We've hosted events all over the world, every continent except Antarctica, maybe someday. But we are definitely a global community. And it's kind of funny because, like we're a US domiciled company. I'm from the US. Wyatt, co-founder, is from the US as well, but we actually both happen to live overseas. And so we kind of bring like an international flair to things, a lot of international deal flow. That's kind of like a pretty big part of what we are. And so, when we talk about like doing events and stuff, the goal is that you shouldn't have to travel far at all. If we haven't had an event in your city yet, like we will get there. But in the meantime, yeah, like we definitely kind of like, New York, London, LA are kind of like the core cities. And then I'd say that just those 3 alone is probably 25% of the entire community. And then from there, it just spreads like you'd expect it would.
Yeah, what's cool about all this, like, unfortunately, there's still not a ton of people who are like super into all this new stuff, right? Or maybe it's just like too misunderstood for them to get really into it. I mean, many people find investing to be a stressful thing anyway. So to find a community of people who are like-minded and into this stuff, like I had so much fun just meeting people in the group who were all into different things. And a lot of them are business owners or they come from different industries. And like you just get to learn stuff from different people who are from all different backgrounds, but have a shared love of like finding cool, unique, interesting things to invest in. So I just think it's really fun and enjoyable. I mean, obviously, I've dedicated my life to being in the alt space, so I'm maybe a little separated from the masses, but like it's really cool to be around like-minded people who are really into this stuff. And I got just as much value from that as learning about all the different things that are out there, and then getting to find opportunities like this. Like, for instance, if you go online, you can find the car crowd, but like you could see, hey, you can invest in this opportunity for £5,000, and it's like, a random website in the UK. You're like, should I even be investing in this? What is this exactly? Now you have this group that's gone and vetted the whole thing, has put together this special fund that allows you to do it directly with alts and then invest in you guys and have more of this evergreen diversified approach. Like, there's a lot to be said for that. I just think that's like a really fantastic thing. And I'm harping on this because I think if you're into this stuff, like this is a great group to be a part of.
Well, I know that they've the other community members have gotten a ton out of like from learning from you, Chris. Right? I mean, like this is it. Like you said, everyone comes from different walk of life. Everyone has different like expertise areas. So I mean, Chris, you and I work together all the time. Like when I've got like a crowdfunding startup question, man, you're like my first go-to, right? Like, I mean,
Yep.
this last week we were talking about like the end of IPOs and what will that become a dustbin in the future? And you had a lot of great stuff to say. And like you're one of like 3 people I interviewed for that issue, and like I mean, that's these are the kind of relationships we're building. It's like, so like you look at the makeup of our community and it's like you have the confidence of knowing like, oh, there's a farmland deal we're interested in. Okay, I know like 5 guys who would be like, yeah, like ready to go to talk about it, to help diligence it. You can do that across almost every single asset class. And then even when we get some new quirky asset classes that we don't have direct, expertise in within the community, like we just tell the community like, hey, like help us out here. So I'll give you an example. I had a Australian fishing rights deal come across my desk a few months ago, and this is for like basically investing in fishing, but very protected, government protected waters around Australia, one of the largest fishing markets in the world. I know nothing about this stuff. I can't fish for shit. I've never gone. It's just I'm like a city mouse, right? Like I have no idea where to begin on this one. And not a lot of people in the community did either, but like their brother does, or like their father-in-law, or whoever, right? And so it's like we kind of like tap into the community. It's like, okay, fishing experts, like let's talk now, right? And so we kind of repeat that across all these quirky, eccentric asset classes. And this is really just harnessing the power of the community to help us diligence these deals.
I love that. I think that's awesome. Um, David, curious to hear from you as you think about kind of the future state of the car crowd as a business. Where do you see this going? Do you want to diversify beyond cars? Are you always going to be focused on kind of this high end market? What are your thoughts there as you continue to think about potential expansion or growth of the business?
Yeah, I think we've got a couple of key milestones that we want to hit. Obviously, we want to be the global leader in collectible car as an asset manager. We want to have a collection of cars owned by investors all over the world that rivals the Sultan of Brunei, and make these assets come out into the light. Share them, have hubs across all different countries, and maybe close to major airports, so that people who are investing in the cars can drop in and see them and experience them, and get more access than they would otherwise get to an asset class, touch, feel it, etc. We're also looking very heavily at tokenization. We obviously have a syndicated trust structure, as I mentioned before, but I think the world is moving more into the blockchain or distributed ledger technology stuff with tokenization. So I think you'll see us within the next sort of 6 to 12 months have some kind of either tokenized fund or tokenization deals as well. So we're already now allowing people to invest using crypto via a partnership with Arrows Group. So we're moving more into that digital currency space as well, which I think is a key thing. And our aim really is, we are experts in cars. We will stick to cars. That's what we know. That's what we love. That's what we do. We really want to make opportunities for lots of different investors, whether that be on a fractional basis via alts, or whether it be private portfolio type stuff where we curate, single collections for individuals using our data-led approach. That's kind of really critical to kind of what we're going to be doing in the future.
One other thing that I was just curious to get more insights on because I didn't fully understand is, and even on your website, you talk a little bit about like there's tax advantages to the vehicle asset class. Can you talk about what that looks like? Does that apply to U.S. investors, or is that more of a Europe thing?
Yeah, so it's different in different markets, but certainly in the UK, they're considered chattel or wasting assets. So all of the car returns that come back from any collectible car investment or ownership, if you make a profit, you don't pay any tax. So
Hmm.
unlike property here in the UK, which income tax on the rental income, stamp duty, and then obviously capital gains tax on any profit, it makes it quite an attractive, still asset-backed opportunity with similar returns, but you just have that much more preferential tax treatment. Other countries in Europe have the same, others don't. So Spain, for example, doesn't have that. They actually do tax on returns from collectible cars bought as investments. I think the US though is similar to the UK, so I don't think you pay tax on your profits from collectible cars at the moment.
Cool. One other question just on the mechanics of all of this. If you want to invest in the SPV or US base, can you invest via an IRA?
Yes,
In
definitely.
yeah,
Sorry, you
go
go
on,
ahead.
no, you go ahead, Stefan. There you go. You got a better place than me
Well,
to answer
look,
that.
I mean, generally the answer is yes. And obviously, there's a couple of companies that can help facilitate that. Our friends at Alto, we all know, are one of them. They're not the only ones. There are others. But yeah, the SDIRA in the U.S. for U.S. investors is a huge tax advantage that not every asset class applies, right? Like this is not accounting advice, financial advice, tax advice, like by any stretch. But generally speaking, yes, that's a lot of the funds that come into our SPVs, especially with very smart, savvy investors. A few of them, like every single time, it comes in through their SDIRA. Yes.
Awesome.
And just sorry,
Please.
Chris, just from our side, in terms of obviously, if you have a private investor in the US that wants to unlock some access to European or Middle Eastern based assets, wants to hold a collection here in the UK, disperse of them either across Europe or back into the US, on a private individual one-to-one basis, we can also help unlock that as well.
Awesome. It is once you're invested in kind of the SPV that you've developed, is it automatically reinvested, or is it basically once the return has been provided, then you say, yes, I'd like to reinvest in fund two or whatever, or will it automatically occur?
Well, we've done one fund with the car crowd, so we call that Auto One. That fund is closed, and profits within that fund get reinvested within the fund. But that fund is not currently accepting new investors. That said, based on the success of this model, and it's still new, right? But so far so good. If that continues, yeah, I think Wyatt, David, and I would absolutely love to spin up. We'll probably call it Auto Two, as is typically the case in this uncreative world of finance. But yeah, we would love to create another vehicle for members, and hopefully even bigger this time, right? So yeah, David, anything to add to that?
Yeah, no, that's exactly right. And the first asset that we purchased is an amazing Ferrari 512M, which people who like cars listening might know. One of only 500 worldwide, the last of the boxer engine flat 12 Testarossa lineage, and something that we've procured for, I think, roughly 30% under market value. So after tax fees, etc., we're going to be hopefully returning a decent amount on that first car, and then look to go again, and that's going to be done hopefully within about 4 months rather than the 6 as well. So we obviously have the mandate, we have the targets, but our view and our aim as the asset manager and the custodian is to beat that and prove our worth, so that Stefan and Wyatt can raise more capital for us to go and increase the spend next year.
Awesome. And then minimum investment typically in the fund?
So that's an interesting thing about the SPV model. And one of the things we love most about it is that we abstract away the otherwise high minimums. David can speak to his the minimum for the car crowd going direct with the deals that they do. Typically, minimums in the alternative investing world outside of Reg A and Reg CF tend to be high, really high. 10,000, 25,000, 50,000, 100,000. It is not uncommon to be well above 25,000 for an investment. For a lot of people, that sucks, right? And so what the SPV allows us to do is have a much lower minimum investment. Now, we don't go as low as like $100, $500. And the reason is the overhead, the paperwork, plus the sheer number of investors is capped for each deal, right? So we don't go too low for a lot of reasons, but generally speaking, like we'll take $10,000 checks. Absolutely. We take $5,000 checks. David, how does that square up against your typical minimums?
Yeah. So for the syndicated investments directly on the car crowd platform, which you'll see we've got a Porsche GT3 RS live at the moment, that's £5,000 minimum. We do go as low as £2,000 minimum. We've got a Lamborghini Gallardo coming on soon, so that will be joining a syndicate here in the UK for those. Our private portfolio clients start from £50,000. And then we're launching, as I say, like the opportunity to get into much larger syndicated assets like a Ferrari F40, and that will be a minimum of £100,000 as well. So there's kind of different levels we try to cater for, and obviously the more capital, the bigger the financial return, but the percentages we aim for are always similar, so always 12 to 15% annualized.
And I
Awesome.
think that this is one of my favorite things about the alternative asset movement right now is it's like there's this phrase that keeps getting thrown around, like the democratization of alternatives. And like, I am not a fan of that word because it doesn't make sense. The stuff isn't necessarily being democratized, but what is happening is, man, those minimums are coming down. I mean, to play in private credit and PE, I mean, it used to be absolutely $250,000 without question, just to come to the table, right? $500,000. Like, who has that? No one has that, right? So, but you can scrounge together 10 grand, right? To pop into an SPV that's, investing in the same thing, in the same stuff. And that's, to the extent that it's democratization, like that's the area I think that like is the most powerful. And I love what we're all doing here.
Love it.
100%.
Well, this has been a phenomenal conversation, as it always is. Thank you guys so much for your time, for what you're building. I think it's awesome. One last question. If people are interested, I know right now the fund is closed, but if they want to get into the next one, where should they go? What should they do?
For us, just go to alts.co. That's it. Just sign up for the newsletter. We'll take you from there. alts.co, alts.co. Just sign up for the newsletter and you're good to go.
Sweet.
Yeah.
And David?
Yeah, for us, it's the Car Crowd, all one word, .uk, thecarcrowd.uk. Again, same as Stefan. So yeah, hit the subscribe button or the newsletter button and we'll contact you from there.
Awesome. Well, as always, none of this is financial advice, but, it just an opinion of mine is diversify, 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 right? A lot of you on this call are probably investors in plenty of startups and private equity type of things. It's great to go cross asset classes and create more of a diversified portfolio. I think this tends to be a very unique and interesting asset class and a really cool way of structuring it. So hopefully you learned something here today and find it interesting, and definitely check out the alts.co guys. They're awesome and continue to find really cool, unique, interesting investment opportunities. So David, Stefan, thank you guys for being here today. This has been awesome, and happy investing everyone on the call. Have a great day.